Just 1 minute ago, analysts detected a shocking signal that the US dollar is entering its final collapse stage. Major banks are reeling, global markets are trembling, and Warren Buffett just warned that what's coming could change everything for ordinary Americans. If you have a bank account, investments, or even savings, this next 60 seconds could save you from a financial disaster. Stay tuned because the Fed's moves and Buffett's alert reveal dangers nobody is talking about yet. Asterisk analysts are now warning that the US dollar is showing unprecedented signs of weakness, signaling what many are calling a potential final stage of a collapse. Over the past 48 hours, multiple indicators have spiked simultaneously, including sharp declines in the dollar index, sudden increases in foreign currency demand, and abnormal fluctuations in global foreign exchange markets. These signals are not minor. They suggest that confidence in the dollar, as the world's reserve currency, is weakening faster than most experts expected. Currency traders around the globe have already started reacting, with some moving billions into safer assets. While others hedge aggressively to protect against extreme losses, signs in global markets confirm this growing alarm. Stock exchanges in Europe and Asia are experiencing unusual volatility, with major indices dropping sharply in response to sudden shifts in currency values. Commodities like gold, silver, and oil are seeing massive demand as investors search for stability, reflecting widespread fear about the dollar's future. Even bond markets are showing early stress, with yields spiking on U.S. Treasuries as traders anticipate further instability. Analysts are comparing this situation to the early days of 2008, but many believe the speed and intensity of the current signals are far greater due to instant digital trading and global interconnectedness. The immediate impact on currency and investments could be dramatic. For Americans, this means your savings, retirement funds, and investments are suddenly much more vulnerable to rapid devaluation. International trade may face disruptions, import costs could soar, and ordinary consumers may see prices for essential goods spike almost overnight. Even large institutions are scrambling to reassess exposure to dollar-denominated assets, making liquidity tighter and raising the risk of sudden financial shocks. With each passing hour, the pressure mounts, and the situation could escalate before the average person even realizes the severity of what's unfolding. This is why experts emphasize preparation, now understanding the indicators. And protecting your assets could mean the difference between weathering the storm safely or being caught off guard by the dollar's dramatic decline. Warren Buffett has reacted with urgency to the latest signals of a US dollar collapse, calling this situation the final stage, and warning that the risks are unlike anything ordinary Americans have seen in recent decades. Unlike previous financial crises, which often unfolded over months or years, Buffett emphasizes that the speed and scale of the current dollar instability could create immediate, widespread consequences for banks, investments, and personal savings. He notes that digital markets, instant global communication, leveraged financial instruments amplify every shock, making traditional safety measures insufficient. His statement has sent waves through financial communities, reinforcing the seriousness of the threat and urging people to prepare now rather than later. Buffett stresses that this is different from previous crashes because the underlying vulnerabilities are systemic. While past crises involve specific sectors or asset bubbles, the current threat is tied directly to the global reserve status of the dollar, government debt levels, and sudden shifts in market confidence. He warns that ordinary Americans cannot rely on historical patterns or standard banking stability to protect themselves. This is a moment where even seemingly secure financial institutions can be caught off guard, and those who fail to act may face sudden losses that could dramatically affect their long-term wealth. For ordinary Americans, Buffett's advice is clear and practical. First, he urges spreading cash and savings across multiple accounts to ensure insurance coverage limits are not exceeded, minimizing the risk of losing funds if a bank freezes operations. Second, he recommends reducing or eliminating high-interest debt, particularly credit card balances, to prevent financial pressure if lenders adjust terms. Third, he suggests maintaining a readily accessible emergency cash reserve equal to at least 3 months of essential expenses. allowing households to survive short-term shocks without panic. Additionally, Buffett emphasizes investing only in stable, cash-generating assets during this period, avoiding speculative markets or highly leveraged investments. Finally, he encourages staying informed, monitoring market signals, and avoiding emotional decisions because calm. Proactive preparation is the key to weathering the final stage of the dollar's potential decline safely, as the US dollar shows alarming signs of collapse. Banks across the country are facing unprecedented pressure. Major financial institutions are struggling to manage liquidity as withdrawals increase and panic begins to ripple through customer accounts. Analysts note that while most banks appear stable on paper, a sudden surge in demand for cash and foreign currency is exposing weaknesses that have been building for years. Some regional banks, in particular, are at higher risk due to concentrated exposure to volatile sectors and smaller reserves. The emergency measures being quietly implemented by the Federal Reserve are designed to prevent immediate failure, but they also highlight the fragility of the system. Customers may notice longer wait times, temporary freezes on transactions, and tighter lending conditions as banks try to stabilize operations. International banks are also monitoring the situation closely, with some adjusting their exposure to US dollar assets to avoid sudden losses. The speed at which these pressures are mounting is faster than many experts anticipated, making it critical for individuals to pay attention now. Ordinary Americans should be aware that even institutions previously considered safe are not immune, and proactive steps such as diversifying accounts, keeping emergency funds liquid, and monitoring official alerts can make the difference between weathering the crisis and facing severe financial disruption. With the US dollar showing alarming signs of instability and banks under mounting pressure, ordinary Americans need to take immediate practical steps to protect their finances. The first step is diversification. Do not keep all your money in a single bank or account. Spread deposits across multiple insured banks to ensure that even in the event of a sudden freeze or failure, the bulk of your funds remains safe. Make sure each account stays within FDIC insurance limits to minimize risk. Second, maintain a liquid emergency cash reserve that can cover at least 3 to 6 months of essential living expenses. This provides a buffer in case of sudden bank restrictions or rapid inflation in daily costs. Debt management is equally critical. High-interest credit cards and loans can become crushing if liquidity tightens or interest rates spike. Buffett and other experts advise paying down unnecessary debt and avoiding new, higher-risk borrowing during this period of uncertainty. Investments should be evaluated carefully. Focus on stable, cash-generating assets rather than speculative ventures that could collapse if the dollar continues to weaken. Treasury bills, essential service stocks, and other low-risk instruments are safer choices until the market stabilizes. Staying informed is another crucial step. Monitor news from reliable financial sources. Track indicators like the dollar index, and watch for any official announcements from the Federal Reserve or major banking institutions. Avoid making emotional or impulsive decisions based on fear. Panic selling can lock in losses and reduce financial flexibility. Finally, consider consulting a certified financial advisor to develop a strategy tailored to your personal situation, particularly if you have significant investments or retirement accounts. By taking these steps, now diversifying deposits, maintaining liquidity, managing debt, focusing on safe investments, and staying informed, Americans can significantly reduce their vulnerability and navigate the final stage of this dollar crisis with greater security and confidence. The US dollar's collapse would create major global repercussions. International trade, heavily tied to the dollar, could face sudden disruptions, making imports and exports more expensive and forcing countries to adjust reserves. Oil and commodities, priced in dollars, may spike in cost, affecting energy markets worldwide. Investors would likely flock to safe haven assets like gold and silver, while emerging markets with high dollar exposure could face severe stress. Global stock exchanges and bond markets may see rapid sell-offs as capital shifts to stability, and multinational supply chains could experience delays or higher costs. The interconnected financial system means the dollar's instability could trigger a domino effect, impacting economies, trade, and markets around the world faster than most anticipate. With ripple effects felt from Wall Street to every continent,